What's up? What's up? What's up, my Mind Your Money business folks? It's me yet again with another video. I am a little late because I was having internet issues, so I will have to make this video quick, right? And as always, hopefully you guys are in the market and not trying to time the market, because that is simply impossible to do. Would you agree? Yeah. So either way, it says Dow closes 600 points, setting record as August inflation increase likely won't derail Fed rate cut. So let's see what happened. It says stocks rose on Thursday as traders anticipated that the latest reading of a key consumer inflation gauge won't stand in the way of the Federal Reserve lowering its benchmark interest rates next week. So it says the Dow finished up 617.08 points or 1.36%, right? While the S&P 500 ended up 0.85% and the Nasdaq advanced 0.72%. Give me a minute, people. I'm still trying to, my internet, I've been trying to fix this thing for like the last 30 minutes. Rebooting, looking to find out what was the problem, and it just came up, and I am running late because I have to go to work, right? Either way, so let's get into the news again. So it also says that it was a confusing batch of numbers, with the consumer price index reading for August coming in harder than expected on a monthly basis, but in line with expectations on an annual basis. The CPI reading showed an increase of 0.4% for the month, according to the Bureau of Labor Statistics, higher than the 0.3% that economists polled by Dow Jones were expecting. However, the index recorded 2.9% on a 12-month basis as expected. Additionally, the so-called core CPI, which excludes volatile food and energy, increased 0.3% in August and 3.1% from a year ago. Both were in line with the Dow Jones forecast. The report also comes a day after the Producer Price Index showed an unexpected decline of 0.1% on the month. Meanwhile, the labor market received yet another sign that is slowing, as weekly jobs claims saw a jump Thursday after job growth figures were revised down earlier this week. Workers filing for unemployment compensation for the week ended September 6 increased 27,000 from the previous period to a seasonal adjusted 263,000, the highest since October of 2021. That's more than the 235,000 estimated that was penciled in. Okay, whatever. So with the growing evidence of softening U.S. economics growth, markets are pricing in a quarter percentage point at the conclusion of Fed's September 17 meeting with near certainty, according to the CME Watch tool, Fed Watch tool. Odds that the central bank will cut by a half percentage point also initially ticked higher. A quarter point cut is a layup, and the number still keeps a half point cut on the table, especially when looking at the jobless data, say Jay Woods, chief market strategist at Freedom Capital Markets. Yeah, that guy. All right, so the bottom line is to watch the 10-year Treasury yield. Okay. Because the Treasury yields fell Thursday in the wake of the data releases, with the yield on the benchmark 10-year Treasury yield dropping to 4%. Okay. So Thursday's gains was broader than recent sessions, with banks like JP Morgan and consumer names like Walmart in the green on expectation for lower rates. And I have some JP Morgan stock, so that's a good thing. All right, so let's get into what the market did today, because I have to hurry up. Nvidia lost 15 cents today. Dang. Closing at $117.17. $177.17. SPLG, the S&P 500 ETF, gained 62 cents today, closing at $77.37. Broadcom lost $9.94 today, closing out at $359.63. 63 cents. Did I say Palantir already? Either way, Palantir lost $2.38 today, closing out at $164.36. I don't know why I keep talking. Tesla gained $21.02 today, closing out at $268.81. FTEC, my information technology ETF, gained $1.13 today, closing out at $213.88. Meta lost $1.08, closing out at $750.90. And Apple gained $3.24, closing out at $230.03. All right, so that's it. That's it. That's all that happened in the market. Hopefully you're in the market. You're not trying to time it. Hopefully you're not straddling the fence. Hopefully you're investing. If you're not investing in the market, at least invest into yourself. Invest into your future. Get out of your own way. That's what you need to do. Create a plan. Get out of debt. All forms of debt. And the way that you can get out of debt is via a budget. By creating a budget so you can start telling your money where to go, so you can stop trying to figure out where it all went, right? So create a budget. Get rid of the credit card debt, student loan debt, car loan debt, personal loan debt. Get out of it. When you are in debt, you are a slave to the lender. I've talked about many times on how you get out of debt. I can't go into it today because I have to end this video. All right, so you guys take care. Have a blessed day. Oh, like, comment, subscribe, share this video, and let me know what you think. If you think anything at all, right? Peace.